Hello everyone, welcome and thanks for watching the Market Report. I'm your host Marcel Pechman, analyst and writer at Cointelegraph. This show debates the most pressing topics in the crypto market, focused on the price change and meaningful events. Today's show first article was written by David Atlee. Ripple Labs scored a partial victory in its lengthy legal battle with the SEC, which dates back to 2020. Judge Annalisa Torres of the U.S. Southern District of New York ruled that Ripple's XRP token is not a security, but only regarding programmatic sales on digital asset exchanges. However, the SEC also notched up a victory of its own, with a judge ruling that XRP is a security when sold to institutional investors, as it met the conditions set in the Howey test. In the 12 hours that followed the decision, altcoins market cap jumped by 9% to $612 billion, as you can see on the price chart. That's this pump over here. The reason? FOMO, fear of missing out. People based on emotion after the headlines popped out saying that XRP had won the case against the regulator. So, during the next day, as investors were able to process what really happened, the altcoins gave away half of the gains. That's this correction that you see here on the following day, giving up half of the gains from the prior day. According to former CFTC chair Timothy Mossad, the SEC could appeal to the judge's decision. Therefore, this initial win for the Ripple company could still be turned around at the Supreme Court. But what's the overall message for altcoins and the crypto market as an industry? Was the risk reduced or not? Well, if you zoom out a bit, looking at the 6-month price chart, zooming out, the recent decision did nothing in terms of price, as we're basically back to the moving average near $575 billion. So yes, we had a price bump, but it went all the way down, back to the 6-month moving average. So the decision was not meaningful in price terms. Furthermore, you've got to remember that the mid-June rally was triggered by the spot Bitcoin ETF request, which has nothing to do with the altcoins and securities regulation. Therefore, if it weren't for the spot ETF Bitcoin request, we would likely have been in a much lower price range. Now comes the big question. What happens if the ETF gets approved? Won't altcoins rally even more than Bitcoin? Well, to answer that question, we need to go back in time and analyze the rally that followed BACT's physically backed Bitcoin futures launch in September 2019. Some of you may not even remember that exchange, but at that time it was the hottest topic ever, as the company had gotten over $900 million in funding, besides having ICE as a partner. ICE is the largest competitor of CME, the Chicago Mercantile Futures Exchange. So ICE is huge, and BACT was the hottest thing because they were launching a physically backed contract futures. So in some terms, it is similar to the spot Bitcoin ETF because it was a futures contract, but based on the spot price. So the Bitcoin will change hands in the liquidations, which happened one day after the trade. But BACT exchange turned out to be a complete flop. But believe me, at that time, it created huge expectations, similar to what we've seen on a spot Bitcoin ETF. So what happened to Bitcoin dominance? So Bitcoin market share relative to altcoins, it increased from 61% to 71% in the 3 months preceding the launch in September 2019. And it sustained the 70% level 3 months later. It makes sense as the exchange BACT was focused on Bitcoin futures and not the altcoin market. So any additional inflow from institutional investors would be towards the leading cryptocurrency, to Bitcoins and not altcoins. Now, will the same pattern repeat for the ETF approval? In some form, most likely. What we've seen in historical bull runs is that altcoins only gain traction after Bitcoin consolidates around a certain price level, when it finds a resistance for a couple of months or weeks. That's when traders give up on Bitcoin and try to find gains on altcoins, triggering the rally. Moral of the story, the XRP decision was a non-event in price terms. The ETF impact is likely the main trigger for the next 18 months, even though initially altcoins tend to underperform relative to Bitcoin. Now, on to the next topic, we'll cover an article written by myself. Bitcoin price falls under $30,000 as macro and regulatory worries take center stage. So the first data point is the Bitcoin futures. The quarterly contracts should typically trade at a 5% annualized premium versus regular spot markets to compensate for the longer-term settlement. Now, let's look at the chart. Notice how the indicator broke above the 5% threshold in late June and has stagnated around 7% for the past week. So basically, it exited the neutral to bearish, so below 5%, and now sits in the neutral area from 5 to 10%. But more importantly, the recent move below $30,000 did not change investor sentiment according to the futures premium indicator. Now, the second data point refers to the Tether stablecoin premium in Asia. This is calculated by comparing the Tether price in yuan terms, the Chinese local currency, versus the official rate. Numbers above 100% mean there's excessive buying demand for cryptocurrencies, causing a premium in Tether. The opposite, when the number is below 100%, when Tether is trading at a discount, it indicates a high demand for crypto sellers. They're trying to exit crypto markets. Notice how the indicator has been declining for the past 10 days, reaching a 2% discount. That's the lowest level in more than 6 months. That's definitely not good, regardless of the rationale behind it. Maybe investors are afraid that Binance will go down, or at least their funds will be stuck for some time. It doesn't matter. There's no demand for cryptos in Asian markets, and that impacts Bitcoin's price. Moving to the fundamental analysis, there are two regulatory issues holding back Bitcoin's price. Firstly, the XRP ruling, which still hasn't settled on the ICO being or not a security. It may not impact Bitcoin directly, but it is essential for exchanges, which in turn impacts Bitcoin liquidity and access to a broader number of market participants. Moreover, the SEC case against Coinbase and Binance, which was reinforced by Binance's decision to let go 1,000 employees. I mean, why would they do that considering crypto markets rallied by 75% this year? The most likely culprit is the exchange risks being increased, not only in the US, but across the globe. Lastly, there's the macroeconomic front. The macroeconomic environment has not been favorable for Bitcoin and risk-on assets. China's gross domestic product GDP growth slowed to 6.3% in the second quarter, falling short of market expectations, with factors such as the ongoing trade war with the United States and the government's efforts to address debt contributing to the slowdown. And in the United States, we also have an overheated markets, so the unemployment is at historical low levels and the CPI continues to increase at 3% above the 2% inflation target. So the Federal Reserve is likely going to be forced to do 2 more interest rate hikes still in 2023. So a higher interest rate means the fixed income investment becomes more profitable. So investors tend to sell stocks, commodities, and invest in fixed income as it's paying above the inflation. So that's bad for risk-on assets such as Bitcoin. Okay, so what's the overall message here? The article shows that Bitcoin is primed to retest the $29,000 level due to external factors such as regulation and recession risk. Traders would be caught by surprise if that happens, judging by the Bitcoin futures premium at 7%. So odds are the liquidations will be huge, further pressuring the price. So I wouldn't be surprised if we break below the $29,000 support and have a flash crash down to 28 and 27, and a couple of hours later we're back at 29 because of the liquidations of the longs using futures contracts, so leverage. So if the futures premium is stuck at 7%, it means there's a slightly higher demand for leverage longs. So in case of a negative surprise price move, liquidations tend to be huge, further pressing the price. Just to highlight, that's my own opinion and does not constitute investment advice or reflect Cointelegraph's official view. Well, that's it for today. Hope you guys enjoyed the show. Don't forget to visit Markets Pro, the official Cointelegraph alerts platform. Our proprietary indicators have been giving profitable alerts for months. There's a 20% discount link in the video's description. See you!